Hello, everyone out there listening and waiting to hear this topic. This is about workers' compensation. So the reason we talk about it in business, you probably get audited every year by the insurance agency, not exactly your agent, but the agent affiliated with audit company, and they come in, they ask you for all kind of information to do what they called workers' compensation audit. Then after they did audit, and a lot of times, I have never really had one who will get refund, but a lot of times you'll end up paying more. And because of the information you give to the workers' comp auditor, right? So today we want to talk about what information you give and what is what. So give you kind of a very basic understanding of workers' comp. You're not an insurance agent, I am not. And we just want to understand what that is to our business so we can properly, at least making sure we're not paying tips, right? We pay what we need to pay, but we don't want to pay it wrong. We don't want to accidentally classifying ourselves into a wrong risk category. So now let's get going with our webinar today. And I will start sharing screen. That's what I normally do, right? I share screen. So now let's start you with something that I put together. And you saw something on the screen. This is a letter. This is the letter one of our clients received from the insurance company. This insurance company was sending out the letter. They're ready to do workers' comp audit. I want to show you this letter because first of all, you know that when they audit you, they give you a period, right? You see this March 30th, 21 to March 30th, 2022. That's not the worst because at least it's the beginning of the beginning of the second quarter and ending of the first quarter is the 12 months, right? But sometimes those days can be really silly. They're like in the middle of nowhere and it's impossible for you to submit data properly. So I would encourage you that if you are having workers' comp audit like this every year, and work with the agency to move your year to January to December. Because if you do that, and your payroll information, everything else will flow really nicely for you, okay? And so that's one thing I want to advise you. The other thing is look at the list of things they wanted, okay? I'm going to read this out so you know what typically during the workers' comp audit, the auditor asks payroll records and employee duties. The reason they want payroll records because they want to know how much you paid. The reason they want employee duties because they want to classify you into a different risk category. I will cover that with you because I want you to understand every job description would give you a different rate. If you pay someone $40,000 a year, they are an accountant. And your premium probably $80 a year. But if you give a $40,000 and this person is drywaller and your premium is $8,000, okay, it's very different. So that's why the employee duties are important. Overtime dollar amount by employee. Look, they want to know that because they want to calculate all your compensation to judge how much they want to run workers' comp, okay? State quarterly tax report, why do they need that? Because they want to see all your employee, you know how you give Net 41, it doesn't have employee information. And they want to know every quarter how your employee goes. That's why they want the state quarterly, right? 1099 miscellaneous, that is only at the end of the year. If their audit period is in March and in March, you know, 1099 doesn't do much for them. And the subcontractor cost records, they want to know how much you reimburse to the subcontractor, other than the money you wrote them in the check saying, hey, this is what I pay you. But maybe the subcontractor also give you another invoice, which is tell you to reimburse the mileage and all of that stuff. So they want that too. Why? Because that they can calculate into the base for calculation. I'll show you what that base is. Insurance certification for subcontractors. Why do they need that? They need that because if the subcontractor already have workers' comp insurance, of course, you should not be bothered with that. But if they are not, then they probably want you to pay for the workers' comp. Total payment for each casual labor used during the period. See? They don't just trust you 1099. They're saying that, well, people you paid under $600 and you did not have 1099. I want them. I want the list. So List of officers, owners, partners by position, job duties with payroll. Look, so the reasons they ask you for that, because obviously you can opt out to not be covered by workers' comp, right? So for example, if I purchase workers' comp for community CPA, I'm not buying one for myself. What's the point? You know, and so it is for your employees. So sometimes the owner do not need to include themselves. You don't have to. You can opt it out. So they want to know whether these people are opting out or not, right? Federal 941 quarterly report. This is the quarterly report, but doesn't have employee name. So they always like the state quarterly report instead. Profit and loss and detailed report. What does that mean? That means they want to see what is your total income, what's your total expense, and all the breakdown. Why do they want to see that? They want to make sure that what you give to them in detail matches what you have on the profit and loss statement. So that's kind of a quick summary to tell you that what happens when they audit you, right? And it's quite heavy. I would say that workers' comp audit is not a cup of tea. So workers' comp insurance for small business owners is a big topic. Okay, now we're into our slides, right? Hey, I just want to tell you that we have a job opening at Community CPA. It's called the digital marketer. We're looking for someone so good with social marketing and I want you to be a team player with us. Someone can pitch solutions to increase our YouTube viewership and the subscribership. And we're doing pretty good, but we want to have 1 million people viewing our website, because viewing our YouTube channel, because we truly believe our content is solid. And we just need people to know us, and we already have what need to be presented. And we need someone to help us to edit our YouTube video into a bite-sized video clip so we can push that out to Facebook, Instagram, and other social media platform, right? No responsibility disclaimer, right? That is so important, and make sure that you take responsibility on what you learn. So don't go onto junk side and really come into the place where you learn knowledge seriously. And I know it is always a better sell when you are fun, or maybe you can, put on a funny hat, making everybody laugh, then you give some knowledge out. We're just really dry people. We don't really know how to do that. And what we can give you is just solid knowledge. We hope you learn. Okay, now workers' comp insurance. Workers' compensation is a form of no default insurance policy. No default insurance policy just means that it is not your worker's fault. It's not the employee's fault. If someone got injured, we cover. And what they are covering is medical bills, lost wages, and of this employee. And the most state require small business owners and the large business owners, regardless of your size, you must buy workers' comp insurance. You cannot operate. And just imagine that you can't walk on the street naked. When you are in business, you just have to buy workers' comp as part of your wardrobe. Okay, so having said that, you may say that, well, I'm not sure I can buy it because I tried and I failed. Nobody wants to sell it to me. And I have an answer for you. You have to. So there are places you can get it. Okay. The requirements and limits, amount of compensation, and all of these specifics are determined by each state, folks. That's why workers' comp insurance is a state managed no-fault insurance policy, and it covers medical, lost wages, ongoing care cost. Listen to that. Funeral expense, if that really happened, right? Hopefully you don't end up in that situation as a business owner. That is so hard. All right, so this one covers all of the things we talked about, right? The funeral, the ongoing costs, the wages, the medical bill, but it doesn't cover certain things. It doesn't cover commuting to and from work. So if you were driving to work, you got into a car accident, that is not workers' comp, even though your destination is the workplace. So that is your car auto insurance, right? And the recreational activities, and your employer took you out to the mountainside. You fall from the mountain peak down to the bottom. And that is recreational activity should be covered separately in the separate insurance policy, but that's not workers' comp, right? And so, you know, when we have activities outside of the company, and our insurance agent always makes sure that we have other insurances going on to cover those kind of activity. Intoxication or substance abuse. So because of the work stress is so bad, so one of your employees started taking drugs and to do better work. Hey, I heard that before, okay? And not with our firm, but there's other clients, employee was abusing, substance abusive. And then the claim is that the employer's responsibility because it was so stressful, so he has to take some cocaine to get better. Okay, that is not covered by workers' comp. Exception might apply, depends on limit of the coverage. So really, and the workers' comp is really directly related to injury caused by working at a job, at the employer's job, right? So that is clarification in terms of what cover, what doesn't cover, right? And now the cost of workers' comp insurance is a whole new story, right? That is really depends on several things, folks. Number one, it depends on your business. So what type of business you are in. And the number two depends on your employee's job description. Number three depends on their pay, right? And each job you have is actually classified by this organization. The abbreviation is NCCI. This is an organization actually will do studies. So they will actually give the classification. They're saying that accountant, okay, the risk level is 48 cents per $100 wages. Then they say contractor, construction workers, and a roofer. Then they would say is $17 per $100. So those are the study they do. So it depends. Now let's take a look at this. I know this is boring stuff, but I want you to kind of follow me, okay? Follow me, just hear me. This organization, NCCI, is National Council on Compensation Insurance. And they produce kind of three manuals. In my own understanding, there are three things they do: basic manual, experience rating manual, and also scopes manual. So those are guidelines for every state when they come up with the ratio, and they would use these guidelines to do. So for example, for roofer and a tree trimmer, what do tree trimmer do? They climb the tree, right? Sometimes, right? And the demolishing company, the demolishing buildings, the cost could be $17 per 100 in payroll. So if you pay someone $100, for that every $100 you pay that person to do this job, you should budget for $17 on workers' comp coverage. Okay, or higher, right? So 40,000 salary would pay 6,800 premiums a year. One person. So that's why sometimes our small business owners, well, you get into the business and you hire the 3 roofer, you pay them $100 a month. I'm just using simple examples. And you go, oh yeah, I had a $300 I can pay. No, you have to figure out the $17 on top of the 300. So it's a 17 times 3, right? It's a $51, am I right? So you not only have $300 you need to pay to the worker, you need to have the $51 on workers' comp. And on top of that, I didn't even mention about payroll tax. And you need to budget another 15% on the $300. So that would give you another $40. So you'll have about $100 extra expense for the $300 you pay out. So there you go. As a small business owner, you want to be aware of your bottom line. But when I say aware of your bottom line, it is not a $300. It is actually $400 to hire the 3 people at a $300 at a $100 each. So another example, for attorney, accountant, real estate agent would be under 0.20 per $100 for their payroll. So for employee that earns $40,000 a year, then your workers' comp is what? $80. See the difference? So workers' comp is very different. Depends on how you classify your worker. So I have a real example. We have a construction company. They're a pretty sizable company. So of course, we pay a huge amount of workers' comp, right? Our client does. But 1 year, when we review the workers' comp calculation, they also have their internal accountant and also internal attorney for the closing and for all of these contractual work, right? And the agent was including the attorney like a roofer, and it was paying huge amount of workers' comp. So, we found out that, then went back to workers' comp. So they were able to reduce the amount of reduction for that company for workers' comp was over $35,000. So this is how important that is for you to know why your workers' comp insurance is that amount. Sure. And I'm pretty sure that if you go by what we talked about today, know your classification properly, and your insurance is probably the right amount to pay. We love to pay that because once you paid it, if you have an injured employee, you don't have to feel so personally guilty about what happened because you know that the system, our insurance system, will take good care of that person. Anything you also help would be even icing on top of the cake, right? It's even better. They had the basics. Then you can do your part to make that worker's experience better. But instead, you are going to worry about what's going to happen and when you're going to be sued and all of these things. Not cool. And we have enough worries in life. You want to make sure that you buy the insurance you need to buy. Don't save on that, but you want to pay the right amount. So let's see how the cost of workers' comp calculated. So the formula is payroll times classification rate times experience modifier equal to premium. The experience modifier is something that I would not be able to give you an example because it's so customized to you. When you are a new company and you have this classification rate applies to you, experience modifier normally is not there. But if you are an existing company, already had a lot of claim, then yes, there is experience modifier to double, triple your premiums. So you might pay 48 cents in premium for every 100 in payroll that goes to a clerk in the retail store. A truck driver premium might be $9 per 100 per payroll. Classification of job type is important to get the more accurate premium. Okay, this classification rate, folks, is a easy to target rate because it is published. It is out there. You can find it. You can look at the code. You can look at the classification. Ask your insurance company agent to give you that list. You can look at it, go, no, I think I should be here. No, that person used to be a roofer. Now, no, he's just doing cleaning stuff. So making sure that you give that right job description, right? Under, common mistake when buying a workers' comp insurance, it would be underestimating or overestimating payroll. Because when we buy workers' comp insurance, it's always buying ahead. So whether your payroll is really that amount or not, it is a good estimate, right? But if you lowered your payroll, then your premium should go down. If you hype your payroll, your premium would go up. So you will get a notice from the auditor and asking you to pay more. That's really what that is, right? So buying insurance, you over or underestimating payroll is one okay reason. It is understandable reason, right? And the insurance of your subcontractor, if you have proof of workers' comp insurance from your subcontractor, that would save you a lot. So I would always recommend you to ask for that. If you have a subcontractor come to work for you and ask them to go for workers' comp insurance, because they are the owner themselves, they can go get workers' comp, but exempt themselves. Okay, if your subcontractor also hire other subcontractor, then you want them to get their workers' comp. They can exempt themselves as a business owner, then only buy workers' comp for their worker, or they can get the certificate of workers' comp showing that they were exempted as a business owner. So that is what you need. Okay, and the poor workers' comp claims management would result higher experience modifier. This is what I was talking about, experience modifier. If you just have left and right claims, who would not increase your experience modifier? I would, because you're not managing your compensation properly. So if this person, happened to break the pinky toes because they shut the office door too hard, and maybe you can resolve that some other means by general liability insurance or what. That's not workers' comp. Workers' comp is injury that sustained doing the work, not when your employee get mad at you, slamming your door, then cut their fingers on it. Okay, that is also another story we knew of our client. And, got into argument, one slammed the door and, nailed the pinky of the other employee. Is that workers' comp? That's a general liability insurance, in my opinion, not workers' comp. They're not working. They were fighting with each other, right? Not verify audits premium calculation is one of the biggest things for you to pay more to workers' comp insurance, because you didn't really look at your premium calculation, and that is not hard. Premium calculation is not science. You just have to know that your payroll needs to be the right amount, and then your classification is right. The rest just falling into formula. Right? So workers' comp annual audit, this is the one when I started talking to you, this is where I was pointing you to, because after all, this 30 minutes is really about to make sure that you understand your workers' comp when you do audit, and then you are mindful of what you are doing, right? You pay attention to your payroll report. That is so important, because if they're asking from March to March, your payroll report need to be March to March. You cannot accidentally give them something different. Okay, and of course, I encourage you to work with your agent, do a short year audit, then next year do a proper one. So that way it makes your job easier, right? And your employee's job description is so important, because that's related to the rate. I give you the example of, 20 cents per 100 or $17 per 100. That is how different those rates are. Actually, those rates are even higher with some states. They're $27 per $100 for contract employee, for construction employee. Right? And that, those rates are different by each state. So I would tell you that, and for the Midwest state, our workers' comp rate for construction company, very high. They're over $20. So you want to know that. Challenge the agent's classification, especially when you felt it was too high. You want to ask the agent, why are you giving me this rate? And is there another rate lower than this, but it still fit my job description? Just nothing wrong with asking for a low rate. And it is not like black and white set in stone. In the big picture, yes, if you're a construction company, you cannot be giving everybody the accountant rate. That I understand, right? But what you want to make sure to know is, inside of your company, people has different duties. You should not be giving 100% of your employee as a roofer just because you're a roofing company, right? So if you have your secretary working in the office, man, this person should be under clerical classification. And the change insurance agent, if it is so hard to understand the class code, is not a science. You should understand. If someone give you a fit for saying that, well, you don't need to understand that, I'm taking care of you, so you just pay what I told you, that's called bullshit. And that is not going to happen. You need to know what you're paying for, okay? And the workers' comp insurance in Iowa. I'm just going to do this really quickly for 3 states, Iowa, Minnesota, California, because we have branches in these states. Okay, so for Iowa, and there is 3 places you can get your there are 3 ways you can get your workers' comp insurance. Number 1, you get from your insurance agent. Any agent, you do your general liability insurance, you can buy workers' comp from that person as well. Okay. Number 2, if you couldn't get it because your history is so bad, and other than that, if your history is really bad, I would encourage you to set up a new company. Okay. But if you don't want to set up a new company, you like your bad history, then you can go to this NCCI and to request for a workers' comp insurance, and going with you don't have to go with the standard market insurer. You can get a special one through this last resort. All right. Then the third one, which is really not applied to our small business owners and large company, they do their own self-insured for workers' comp. If you have a large labor pool, and if you have more than 500 workers in your business, and having this kind of self-insured workers' comp is working better, because you would be able to pay if someone get injured. You should be able to have that money, but that is a whole new requirement. It's not something you can qualify easily. So in Iowa, if you don't have workers' comp, and you can be charged criminally. Okay, criminally. So that's why I brought this up for you. And you can be facing 1,000 payable to the Second Injury Fund of Iowa for not properly filing employee injury report. So 1,000 payable, and to the Second Injury Fund, that's the fund for the workers. So you get charged for 1,000, and then you have look at the last one, the 50% of additional benefit for delaying and denying weekly benefit. They give that 50% additional benefit to the employee that you deny the benefit. So there is just some laws around the claim. So if you really got into workers' comp claim, and make sure that you have your attorney, you have your CPA, people who understand these things, you have your insurance agent to assist you. Okay, so that's Iowa. It's a law. It's not a simple compliance, and you can be charged with civil, criminal injunctions. This is not like tax penalties. This is a criminal court. Okay. Then in California, you can also buy workers' comp in 3 places as well. Like the standard market insurance company can sell, and you can also buy it from the state fund, and you can also have your own self-insured workers' comp. So this is very similar, right? So every state gives you a route to buy those insurance. You have no way to say that, I couldn't get it. Nobody sell that to me. That's not an excuse. So you must have it. And this is the workers' comp insurance in California. They also have these penalties for you if you operate without. So this just tells you that who is enforcing those. There's a stop order issued to you, so you can't operate your business. And the Division of Labor in California would give you all these penalties. So I just want to show that to you, so you understand what that means if you don't have a workers' comp. Not a good idea. You must have it. So workers' comp in Minnesota is the same. You can buy that on the open market. And if the employer is not able to obtain insurance in the voluntary market, and you can have this assigned risk pool coverage, and you can call this number at the Minnesota Workers' Comp Insurance Association. You see? And they also have the self-insured, where is for larger company. And if you don't have insurance, the employer may be ordered to provide necessary insurance coverage to refrain from employing any anybody at any time until you get the insurance. So having said that, that just means that every business must have workers' comp insurance. To get workers' comp insurance, not hard. Go to your general liability insurance guy and get them to help you to get one. If for whatever reason you can't get one, there's always a state established resources to get you that insurance. And if you're big enough, you can operate on your own. And the one tips to take home, if you have a lot of subcontractors, your subcontractors should have their own workers' comp insurance. Let's say if I'm your subcontractors, you pay me $100,000 a year. If I don't have workers' comp insurance, you are going to pay me $100,000 times $17 per 100. That means you pay my workers' comp $17,000. Okay, I welcome that. You can pay me. Okay, pay me so in case I get injured, I can get covered, right? So the best practice is that you require Ying to get her own workers' comp insurance. So I will go to workers' comp insurance and say, I have a Ying LLC, I'm doing drywalling, I like to get workers' comp insurance, I'm the owner, I can opt from covering myself. Then I can show you what I did. Then you can show that to your auditor at workers' comp. So that way you don't pay for subcontractor. They really should have their own insurance. So I hope that's a good takeaway home today for practice tips. And I will see you on Saturday. And this Saturday, what we do is we actually will work on a business plan together. And I have a lot of inquiries to our firm about, oh, Ying, can you write a business plan for me? And what do I need to do if I want to write one? And we will just go through an idea together, and we will just do that business plan together. And then after that, and I hope that gives you a sense of when people talk about business plan, what exactly they mean. Is that just a piece of paper, or you were Googling internet trying to figure out whether you can find a template, then you can just change the name and number so you become yours? No, that's not a business plan. Let me explain to you in my way of how business plan works. Hopefully that sparkles your creativity and you can write a business plan that is for you and also attract people who you want to attract, whether it's a loan or it's private equity investor, because you got to write that with your business ideas. It is not a template thing. It is about how to lay out your idea to make that reality. It's a lot more than just a template. So I hope to see you on Saturday. Okay, bye-bye.